there have been several other news of acquisitions recently, but you also had stated, I believe, that you had about 6 billion in relatively dry powder that you could allocate towards your acquisitions. Has all this been expended, or is there more to come?
Well, our at a consolidated level, cash and marketable securities and cash equivalents will be nearer to 9 or 10 billion.
Okay.
And it's still available. So if you have any good ideas.
We'll talk later.
All right. I'm not offering you a commission, but I definitely would value your input. But essentially, we're pretty rigorous about our investment philosophy. And so we're really looking for very specific types of businesses. We've been very fortunate that when we find them, we've been able to generate pretty attractive returns. And that's worked well for us. So we're not kind of running around looking at everything. It's got to be something in food and drink and logistics and infrastructure. We're not looking for businesses that have huge amounts of key man risk, key person risk.
Okay.
And they've got to show a 15%, prospective return.
Okay.
In hard currency.
That also makes me want to that also reminds me of the Sage Logistics that you recently had and sold a stake in there. Was the reasoning behind the stake and keeping the amount that you held of equity in the company?
So why do we get in and why do we get out?
Yeah. I mean, yeah, you can always say that you had achieved the goal of what you said a while ago, 15%, and then getting, I believe it was about $1 billion when you got in, and if memory serves correctly, you did about like 100% on it, and then sold out a good chunk of the stake.
What we realized a gain of about 1.5 billion, depending on how you look at it, and 1.4 billion, and then we were holding the asset on our books at about 400 or 500 million. So I'd say over the course of holding that investment, we tripled our money.
Okay.
Over maybe 4 or 5 years. And don't hold me to the specific entry and exit dates, but the headline is we did very well. Our reason for entering is that we're trying to shore up our wider range of kind of network investments in Kingston Wharves, in and around Kingston Wharves. And Kingston Wharves has a strategy of making sure that it has expansion potential in and around the port with real estate, etc. And the vision of Sage was and is to do some of that, and it's done a good job at it. And the things that it's doing are very compatible with Kingston Wharves. And Sage itself owns shares in Kingston Wharves. And so that's worked well for us. The reason we exited is that we believed that COVID would throw up new opportunities globally, as well as in Jamaica, because valuations would suffer because of the uncertainty. And so we wanted to have cash ready.
Liquidity ready.
Our business has turned out to be better than one might have thought if you look at the Q3 numbers. Yeah. And so it's been good, but we've been around for 90-something years and we take risks pretty seriously. So going into that kind of buzzsaw, we wanted to make sure we were ready no matter what. So we did a couple of things. We took some liquidity, but we also, going into COVID, renegotiated our long-term debt instruments, kind of stretched the maturities, locked in the lower rates, and put ourselves in a very strong position. So.
Okay. All right. And I ask because there's definitely a big focus on logistics for you between Kingston Wharves, Sage Logistics, Geest, and the other operations. So I recognize that it's a big avenue for you. You obviously have a lot of experience in the regard, So it's definitely something I always look forward to when I see the strategic moves you make, when you make them, and the level of investment that you put into it.
Well, I mean, it's kind of trivial, but and not to be taken too seriously, but as long as people are consuming things like tangible objects, you need to move them around.
Mm.
And as long as people are going to be alive, they're going to need to eat and drink. So none of our businesses are kind of typewriter businesses, you know, which has its downsides. Because obviously, if we're going to invent Facebook, we'd have a very significant upside.
Yeah.
But we're going to be able to do what we do more or less, decade after decade. We think, you know. So the same core elements that existed at our founding, you know, food and drink and shipping and logistics, are the ones that we do today. No, you have to move where we make mistakes as a company when we don't move up and down the value chain, because different parts of the value chain can make money at different times in history. The ports make money sometimes, shipping lines make money sometimes. In the food business, sometimes it's the farming side, sometimes it's the processing side. And sometimes we've taken too long to reallocate capital within that chain.
Okay. Oh, but so would you ever, like in a situation like that, would you ever give thought to say raising money on the market? Like, has that ever been on the table for JP?
Well, fortunately, we haven't. In the last 10 years, we haven't needed any money. When I became CEO, we had some big challenges that constrained our capital. And I think we would have had in the back of our minds the knowledge that we could raise money. But we've done debt raises over the years to buy Kingston Wharf. We tapped we actually had a listed note. But obviously, the investments that we make, the returns on those investments are supposed to be higher than debt.
Right.
So we can use
leverage.
Don't
mind taking on the debt.
Yeah.
Okay.
And if it can't be bankable at the level of debt, then we really shouldn't be doing it.
That's fair. But yeah, even speaking to when you took over as CEO, right? I also want to highlight that your father was a very big part of JP before you had taken a step. You know, so for example, I even had it right here, man. Yeah, can you tell us about the role that, you know, your father would have played in the banana export industry at JP Producers, and that kind of led you to take over at that point? It's like a succession thing for you?
Yeah, it's a kind of complicated subject. So, I mean, his just addressing his role first, he would have joined the company in 1979, which was a really interesting era, because Jamaica would have definitely still been in the banana business in all its glory. And would have planned to be in the banana business for a long time looking forward.
But then we had a hurricane, I believe, right? A very serious hurricane.
We had a lot of things that went wrong. I mean, obviously, you know, the cost of capital went wrong, and so the capacity to kind of reinvent the technological footprint of the business was a challenge. We had overvalued exchange rates for a long time, so we were uncompetitive as a country. And Jamaica relied on a trade regime with the UK, so we were duty-free into the UK, but some of the competing countries like Costa Rica or Honduras or Colombia paid a duty, so we had a protected market. So that was great, and made a lot of money doing it. And he spent a lot of time trying to make sure that we maintained that protection, and did a very good job with it, you know. And it was an era, you know, before the cell phone and before the answering machine and before the fax machine. So you're running a multinational in those days was quite complex and tough. And anyway, in recent times, the hurricanes hit. So in 2004, there was Hurricane Ivan, then Ivan, Dean, Dennis, Emily, Gustav, back to back up to about 2008. And every time that the farming business got hit, we had a bill of about $150 million. Just when you fix the farm up again, it would get blown down again.
Yeah.
And so I kind of was watching this from the sidelines. You'd mentioned that I was at Carbon Investment Fund, Carbon Equity Partners. and took the view that I wanted to be a part of this thing because I thought it was valuable. I thought it made a huge success story at building a multinational in a tough era. And so I asked to join. And Charlie Johnson, who is now chairman, was chairman then. And I approached him and asked to join, knowing that we'd have to ultimately have a new bag of tricks, but that the foundation that they had built would be a good platform.
Okay. And even speaking on the result of so, well, all right, let me not get into that side of things, but even in just general management and allocating, say, your skills and your time to that, how do you even manage to find time to be director of so many companies, right? We're talking, as I said before, Blue Power, Lumber Depot, Scotia, KW. Like, how you manage to allocate all the time, and what makes you want to maintain so many of these positions at once?
So how do I do it and why do I do it?
I want to hear both, to be honest.
Okay, no problem. The how is easier. I don't know if I have a good answer to the why, but the how is that the businesses have very strong general managers or chief executive officers, and they also have a strong control environment, and that's really very important.
Right.
And so where I think I can add value is in making sure they maintain those things, and then in supporting their strategic objectives. And so, there's also a little bit of an insurance policy type role where if things go wrong, you're available to jump in and do a deep dive on the things that really matter and count in the businesses. And similarly, if there are huge opportunities, allocate time for that. And so essentially that's how my day is basically spent. So there's a consistent set of things that I have to do to steady the governance of all the businesses that I'm associated with. And that's a pretty intense calendar. And then there are people who kind of manage and block and tackle that calendar without my involvement in it. So making sure that all those meetings exist, that I get there on time, that I have whatever I have to read before, etc. And that's a steady calendar. That takes up maybe 30% of my time, a third. And then if we're doing a deal or we're solving a crisis, then I try to go all in on that. So, but none of the businesses require me to kind of get up in the morning and harvest the bananas or anything like that. I can block out time and literally camp out in the jurisdiction where the opportunity is. I was last week in England, in Portsmouth, and in the Netherlands. Basically we closed a deal to sell a lot of juice to a big supermarket chain in the Netherlands. And I'm able to just do that all the time that I don't have those regular meetings. And then the last thing is kind of listening and talking to people and trying to put together the pieces of the puzzle. And a conversation like this has value, but all of the things that I'm doing kind of overlap and interlock. So if you look at a business like Kingston Wharves, which handles, say, 90% of the car imports in Jamaica, maybe north of 95, 96% of the car imports in Jamaica. So I would have a vision or a clear view of how those car imports are moving quarter on quarter, which is a very useful data point if you're trying to understand the loan book of a financial institution which has an auto component to it. If you're involved in, say, the lumber depot business, which obviously moves with construction and construction inputs, which are heavily related to logistics, as you know, the price of steel and the price of lumber, but also are influenced by construction demand in Jamaica, then you have an insight about mortgages and consumer confidence. And so you're constantly putting all the pieces together. And for people who do what I do, you need to have that macro knowledge, and you have to invest in it. And it's basically the university that you go to kind of get up in the morning and do the job.
Yeah, like University of Life, putting all of these aspects together, and then it gives you like a real proper layout of the actual practical situation of, say, Jamaica in general, or the relationships with international bodies and multinational corporations, and how Jamaica is actually growing. So you'll be able to actually see from all of this now, the direction where construction is going, if it's going up, if it's because it's pretty clear on the state of real estate and construction in general in Jamaica, right? Whether it be from actual government projects, commercial projects, residential projects, you can directly see that. Right?
Yeah, I can see the stuff going up. Mm-hmm. And so, but then of course you really have to get one level below that and anticipate what's going to happen next, and when is it going to top out, and are all those things that are going up going to be sold, and are people borrowing the money to buy them, and government is a very important actor as well, and so both because I'm a citizen and because it also helps to kind of put together the picture. I always try to take on a government assignment, one government assignment. I don't like to do more than one at a time. So if I typically, so right now I have a no net new boards policy. So if I take something on, I drop something. Mm-hmm. And so for the first half of this year, I had a very exciting project, which was very interesting to me for government, where the government wanted to have a 15-year vision on how to transform education. And so they had a commission which is chaired by Orlando Patterson, who is a professor of sociology at Harvard. And they invited me to join it and to write a piece on the financing of education in Jamaica. And that to me was just powerful, because it's a whole other system of all the moving parts you'd expect, people and money and infrastructure and it's just an education in how that one works. And there's other systems like the healthcare system that you want to understand as well. So,
all right, that's fair. And speaking of new projects and relationships, we had mentioned it earlier, but I want to backtrack to it now. Tell us about the arrangement with Norfolk Equity in Dominican Republic. Like, how did that get started? What was the ideal relationship? Was it always something that you wanted and then, you approached them, or did he approach you? Give me the backstory.
No, the backstory is that I'm 52 and I've decided to begin to get to know, the generation of business leaders and entrepreneurs that's a little bit younger than me, and do that proactively. And Kari, in my view, is, a leader in that group. Kari Robinson, who is chairman and principal shareholder of Norfolk Equity. So from where I sit, that was a big part of it, which is trying to understand that leadership group and trying to do things with them. Kari has built a bunch of phenomenal forward-looking businesses in Jamaica, and my job is to kind of get to understand that. And he has quite a lot of exposure to Jamaica and wanted some exposure outside of Jamaica. And obviously both of us were eyeing the DR because of the high growth rates and a large consumer population, which we spoke about before. So for me, the particular business that we got a good value on it. But I was really willing to do something with that generation. And I think Kari is one of the, maybe 3 or 4 people I would do it with. And so that checked that box. Obviously, the value, which we spoke about, and then having more of a consumer platform in the DR, because we have a manufacturing business in the DR. We obviously have our logistics business, the shipping line that calls the DR, but we didn't have a strong consumer touch point in the DR. So when those things came together, it was a natural for us.
Very nice, very nice, very nice. Yeah, you had mentioned about like 3 or 4 other business leaders in the generation right below. You feel like naming them? If they're listening right now and they want another interview, who knows?
I sit on the board of Epley Property.
Right.
I think Nick Scott has been very impressive. And his role there has been very powerful and very considered leader. I had a long partnership with Panjam. We bought a coffee business, Mavis Bank, which was at the time one of the top 2 coffee companies, and we exited. And I know they've had a leadership change. It's a big business, Panjam, and they've made a generational change. To Joanna Banks.
Right. Yeah.
I'm not good at kind of knowing all the ages and names, but I would say that there are quite a few people who are pushing in newer financial services. Not all of them have kind of revealed their hand yet, so we'll watch how that goes.
Okay.
And in existing big financial groups, there's some very good talent. I think, frankly, the generation that is 10 years younger than me. So when I kind of came of age, we were at the tail end of definitely end of the 70s, which obviously had a huge amount of state involvement, and then we had to unwind all of that in the 80s, and then we kind of exploded it in the 90s. I think the talent that's coming up is really very entrepreneurial, very driven. We're from the outside, looking outside in. I think Jamaica is in a great place.
I agree.
Frankly, I could go on and list probably a few more, but you only asked for 3 or 4.
Yeah, that's fine, man. That's perfectly fine. I just wanted to really highlight them and to get an idea of your outlook on it all. Yes. There's actually one. I should have asked this earlier when I was talking about the company's acquisitions. But could you tell us about, say, the revenue compound annual growth rate expectations from these acquisitions, or the long-term EBITDA margin targets of the most recent ones? If you want to get directly into the minutiae of it all.
Yeah, we don't have EBITDA margin targets as a principle, or revenue targets as a principle, because EBITDA margins really depend on how much capital you've employed. So if you have a low capital business,
then you know what to expect out of that, right?
So what we do care about is return on equity. And return on investment. And we target a compound annual growth rate in a loose proxy for what we care about is shareholders' equity. It's kind of flawed, but in terms of what's available publicly, you can look at that.
Right.
And we target a 15% long-term average growth rate in that. But the reason it's flawed is because a lot of our wealth, our assets, are not traded on the public market. So if we hold real estate investments in Kingston Wharves, you're not going to see that move in the way we do our accounts through shareholders' equity. We, for example, bought our juice company for about €7.5 million in the Netherlands. It was loss-making. Its EBITDA last year would have been certainly this year would be north of €6 million. And it's a very unique business. with tremendous long-term attributes. And so if you're looking at kind of what you could sell it for, you'd have a double-digit EBITDA multiple on it. And so, but that's not reflected in the balance sheet. So even though you'll probably see something pretty close to 15%, depending on the year you look at it, we're definitely hitting our targets of growing our kind of asset base by at least 50% in real terms.
Okay.
Without raising additional capital.
Which is really impressive as well. Right. And in that same vein, are there any more planned acquisitions that we can be looking forward to? Anyone that you want to give a brief heads up,
So we're likely to do something more in logistics within the next 3 months or so. And then I would say that, so we kind of definitely like to pounce when there's uncertainty. So we made a lot of deals after 2008, going into 2012, 13, when, so, 2008 had both kind of a global meltdown as well as the JDX, NDX stuff in Jamaica. Yeah. And then we got that kind of behind us, the interest rates dropped and asset values started to really peak and PE multiples were in the high teens, and that's not really our kind of vibe. So we really look for value deals. So we stood on the sidelines. We probably our last big investment into Kingston Wharves would have been 2016. And then after that year, we started to sell down a few things because people were willing to pay for them,
Yeah.
Some money off the table. And you mentioned Sage being an example of that. And then once COVID hit properly, we decided, okay, now we're going to go back in and buy up some things. So we've done 3 announced deals this year. One being Geest, which I mentioned to you. You mentioned Alaska, which is the thing that we did with Norfolk. And we bought a juice company in Spain. So I want to do at least one more by the end of this year or the next year. And I think we'll still keep buying right into the third quarter of next year, depending on how all this confusion with inflation and interest rates goes. If interest rates start to peak, we'll probably keep some cash and make good money doing that.
That's fair.
So we're still in acquisition mode.
Yeah, man, it's definitely the principle, man. You can never waste a good crisis, and as the mantra goes, man, buy low, sell high. So
yeah,
it's just
one thing we're trying to do right now with the current interest rate environment, which hopefully will continue to last, and it's been announced, is we're trying to look at infrastructure deals, which are larger deals, heavily financed, leverage finance, very complex. So we're looking at a big water project in Jamaica. And it's been publicly disclosed that we've also been looking at the airport business. With the initial, there's a tender on in Barbados.
Okay. Right, man. Speaking of interest rates, so like, what's your view on the recent increase in rates? Is it warranted? Is it definitely necessary? Do you think there's still more to go in the increases?
Sorry, you're asking me if I think that there's more to go and if what has been done so far is warranted?
Right.
I can't speak to whether there's more to go. The central bank says that they're looking at inflation expectations and that those inflation expectations have run ahead of a band for inflation that they have been mandated to stick within by the Ministry of Finance or the Ministerial Finance.
Mm-hmm.
And the inflation expectations that they have seen, based on, they do a survey of businesses asking what their outlook is. And the outlook for people has been higher than the band that they're trying to keep us in. And then they have a limited range of tools that they have to deploy or they can deploy to bring us back into the band. And I think what they're trying to do is send a message that they are caring about this band and that the band matters and that we're not going to find ourselves in high inflation environment without reference to the target that we set for ourselves.
Okay.
And I think that signaling is important, but it's a little bit different than constraining money supply to the extent where people cannot do commercial business or make strategic decisions about deploying capital, etc. But hopefully, it is a signal that we don't all need to rush out and reprice everything, and in particular, wage demands. So hopefully, it's sending a signal to all of us that the forces that are available to the government of Jamaica, including the central bank, even though it's independent, will have us return to this band. And so if I'm pricing my goods, if I'm pricing my labor, if I'm pricing, I'm forecasting it for my investment decisions, I'm hoping that people will pay attention to the messages that the central bank is giving. So from that perspective, I think it's good. From the perspective of actually constraining demand and actually making it harder for you to start a business tomorrow morning, I think that's a very bad idea. Because I think that Jamaica needs to produce more and can produce more, even within the current inflation environment. So I'm actually okay with it within that context. But if it starts to genuinely pinch on actual output decisions, then I would be concerned. Now, if you're as far as the outlook, if it has the effect that the central bank wants it to have, then I would expect it to not continue to compound at the rate of increases that they've been doing. We'll play in a game, But if there's high interest rates, we'll figure out a way to make money there.
Yeah, that's naturally the flow of it, man. Like, just the environment will always be changing, right? We can't control the climate with these things. We just have to navigate around it and figure out, okay, well, if that's the case, well, what do we do next? And then if it changes again or increases again, then it's okay, well, this is the avenue that we're taking from here. So just a matter of pivoting and restructuring, right? Yeah, exactly. All right. Okay, excellent. I think that's just about all the questions we had outlined. So, once again, thank you so much for your time, Jeffrey. Guys, this has been a great interview, really insightful. We have a whole lot of perspectives coming from back in the 90s in different outlooks, in different fields. And Jeffrey's just been great and amazing at placing the structure for us and showing us, okay, well, this is how we've been doing it and this is how we're going across. Right? So I want to really thank you again for your time for coming out here, Jeffrey.
Cool.
All right, thank you.